Welcome to the Investing Chartered Accountant, and this is my 2025 review of my portfolio. I'll take you through the good and the damn ugly, and one of them is really ugly in terms of my portfolio performance. For new people who have just come on and looked at this channel for the first time, I opened an trading 212 stocks and shares ISA in about middle of June 2025. So it's pretty much only been going for 6 months, and my aim here is for pretty much steady and stable growth for over about a 5 to 10 year period. But for the first 6 months, let's have a look at how things have got on, and I'll show you everything that's happened. Like I say, both the good, and some of it was very good, and just some of the ugly, and there is a pretty nasty one in there. So these are the top 5 performers of my portfolio, and we'll start off with the ugly first. And the first one here is BMM, and you can see that's a £17.47p loss, and that is actually a realised loss. I sold out of BMM. I just couldn't see any short-term gain that was going to come from it, and even to the mid-term, I've got real doubts over whether BMM can turn themselves around and get the share price back above, and the sustainability of their dividends looks challenging. So I just thought the best thing to do is just come out. So on the good side, it is IG Group, and I've got an unrealised gain of £58. So that's good. I should say now that my portfolio is I've invested about £12,000. So you can see, £58 growth. That's a pretty decent over 6 months. In fact, I think I only got into IG Group about November time, so I managed to catch it on a dip. So I was fortunate there. So let's go back down to the ugly. And for here, it's good old Pain Pal. I thought I was buying it on a dip. It keeps going down and down and down. PayPal richly deserves the title of Pain Pal at the moment. I still think this will turn around, so I'm still got confidence. I'm not looking to come out until I believe it will go just above, and then I probably will come out of PayPal. I just don't think it is as good as I thought it was when I went into it. Next up, Taylor Wimpey on the good side. I like Taylor Wimpey. I got in when there was sort of like a mass panic over it. It came out of the FTSE 100. The share price pretty much crashed down to the mid-90s, sort of where I got in. It's now it's around the £1.07 mark. It's a really strong dividend payer. UK really needs house builders. This is the one I focused in on, and really happy with the Taylor Wimpey result, and this one will stay in my portfolio definitely over the next 2 to 3 years. Okay, on the ugly side, it's Marks and Spencer's. I've got about 100 shares. They've just come out with a latest update on their Christmas trading, which was extremely positive, especially on the food side. Less so on the clothing and accessory side and the fashion, but the food sales are very good, and their stores are always busy on the food front, and it's where they're focusing new store openings on. I'll be keeping M&S. I might trim it when it goes up my current purchase price, but I'll still keep about half of them. So I've still got confidence in M&S. Now we go into the world of where you play safe, which is on the ETF side. So my Vanguard FTSE ETF, look at that, £71 growth. That includes dividends. Happy with Vanguard. We'll look to grow it. ETFs at the moment does seem to be the safer bet versus individual stocks, especially from my portfolio perspective. Now we're up to number 2. It's Bunzl or however you want to pronounce it. Would help if I didn't delete the previous 2, but Bunzl 30. See, it's going up now, so a £33 loss. They've really struggled with the share price. It's coming down. I think it's hovering around the £20 mark. I bought in at just over £22. So I can't, I think this will be hard push to turn around in the short term. Probably another one where I'm looking at it and thinking shouldn't have bought it, probably not core to my strategy, and will probably sell out. On the good side, you'd be unsurprised to see it's another ETF this time. This one is an accumulating one for the Invesco All World. Great result, £86. Love that ETF. Just need to add to it. Just been a brilliant performer. So here we go. The ugliest performer of my portfolio in 2025, Hilton Food Group. And this is by far an absolute shocker of a result. Really poor. Well, what can you say? It was a terrible decision. I think it's one of those ones where you follow what some of the YouTubers do. They were saying this is a brilliant company. I probably listened too much, went in. I think the key thing here, a bit like when you're looking at this on my channel, this is not financial advice. Do your own research. Hilton Foods just really gone down and continues to fall. I'll be holding it though for about 2-3 years, and when it break even, I will probably sell. So very disappointing, bad investment decision, but one I'll learn from. And good, SoFi, and top performer, £86.44. I have bought and sold. So I've sold when I've seen it go high, so around the $30 mark, and I've bought when it falls below 27. Rinse and repeat. So it's a great outcome for me. Very happy, and brilliant performer. A lot of that is realised. All good. So overall, what does this mean? So my total portfolio balance is as follows, if I get this right. So for my portfolio, I invested £12,000. My unrealised gains is sitting at 270. My sales, which includes quite a bit of SoFi to be fair, or SoFi, £140 gross sales. I think you need to net that against fees. So this is both stamp duty here in the UK and foreign exchange when I buy US stock. So that's got to deduct 60.55. The next one coming through is my dividends, and I'll do a separate video on dividends. So my dividends come in at just under £74. Doesn't sound a lot, but in 6 months, I'm pretty happy with that. Cash interest on balances that haven't been invested, a pretty decent 35. So that leaves me with a total position of, drum roll, just under 12,460. So what you can see there is the total change is £460, and that means the growth that you'll see come through, and would help if I had it in percentage, is just a little under 4%, so 3.8. So this is a 3.8% growth in 6 months. I'm pretty happy with that. There's no doubt other people have outperformed that, and this is just my own journey. If I took out Hilton Food, it would have been a heck of a lot better, but I'm quite happy with the 3.8% growth over 6 months. That's a pretty good outcome. And that's where I will do a video that shows how I got to that 73.90, and on that video I'll also lay out my expectations of 2026. So I hope you found that useful. I'll carry on the videos showing the journey going through into next year. I think my aims there is to try and invest about £500 a month, and probably look to focus more in trying to get ETFs and reduce some of the positions that I've got from an individual stock basis. But I'll do another video on a complete deep dive in my portfolio. That just leaves me to say Happy New Year one and all, and hope your investing journey through 26 continues to be really strong.